You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Okay, let's unpack this. Imagine having a bird's eye view of the world's most critical developments, finance, geopolitics, all distilled for you in one place. That's really what we're trying to do in this deep dive. Today, we're digging into a pretty comprehensive global markets and geopolitical briefing. It's this rich stack of sources covering everything from currency moves, commodity shifts, those complex trade talks, and just the ever-shifting global political scene. Our mission, it's to give you a shortcut, really, to being genuinely well-informed.
Exactly. Our goal today is to cut through some of the noise, the daily headlines, pick out the crucial data points, and maybe more importantly, figure out how these things that seem separate are actually, deeply interconnected. We want to offer you not just facts, but maybe some surprising insights, clearer perspectives that kind of light up the implications rippling across the globe.
Absolutely. So whether you're prepping for a big meeting, or just need to catch up on the world, maybe you're just really curious about what's shaping things. We're here to give you those aha moments and those memorable details without, the usual info overload. Think of it like getting a masterclass in global affairs, but clear and engaging. We have a lot to get through, so let's just jump right in. So the currency markets, here's where it gets really interesting right off the bat. They often act like the world's nervous system, don't they?
Yeah.
Reacting to every tremor. But what's the big picture right now? Is there any clear direction, or is it more, a holding pattern?
It really feels like a holding pattern, yeah. The most striking thing is just how subdued the currency markets are. It's almost like they're collectively holding their breath. You look at the dollar index, for instance, trading in a very, very narrow range. And that tells us big players are waiting. They're not really making aggressive moves, which raises the key question. What exactly are these markets waiting for that's keeping everything so quiet?
And the briefing really focuses on that, doesn't it? It seems to suggest it's mostly about waiting for some crucial U.S. data later this week. We're talking key economic indicators like GDP, PCE estimates, that's personal consumption expenditures, the Fed's favorite inflation gauge.
Yeah.
Right? And also the latest jobless claims. These aren't just numbers. They could genuinely be game changers for the dollar, maybe give it a jolt or just confirm this wait-and-see mode.
Yeah, exactly. And meanwhile, you've got the euro showing, pretty remarkable resilience. It's holding steady despite the broader uncertainty. And this stability seems to reflect partly a lack of fresh catalysts from the Eurozone itself, but also specific political news out of France. The French finance minister, Lombard, recently confirmed the 2025 deficit target is still intact and the 2026 budget is almost ready. Now, why does that detail matter? Because it sends a signal, a critical sense of stability in, sticking to fiscal goals in a major Eurozone economy. That helps underpin the euro right now.
Okay, and then there's the yen. Still struggling for direction, often called rangebound. It seems caught between uncertain risk appetite. Can't quite find a path. Bank of Japan policymaker Nakagawa repeated that policy adjustments would only happen if the data backs up the outlook for prices and growth. But the market reaction was telling, wasn't it? They kind of shrugged off the comments.
They really did. It suggests traders just aren't buying into any immediate shift from the BoJ's current dovish stance. It's like, okay, heard that before, show us the action.
Mm-hmm.
And sterling, for its part, it just keeps pivoting around its 50-day moving average. That's a common technical marker for the short-term trend with very little domestic news to push it one way or the other. But here's something interesting. That modest strength we're seeing in the antipodean currencies. So the Australian and New Zealand dollars.
Right. So if sterling is just sort of treading water and the yen is stuck, what's behind this surprising bit of strength in the Aussie and Kiwi dollars? There must be some connection there, maybe something unexpected beyond just their local economies.
Precisely. And the catalyst, interestingly enough, actually came from China. which is, a significant but maybe less obvious driver for these Pacific economies. The People's Bank of China, the PBoC, they surprised markets. They set a stronger than expected yuan fixing. That's a subtle signal of confidence. But for New Zealand specifically, the PBoC extended its swap agreement with New Zealand's central bank for another 5 years. Now, this isn't just technical finance stuff. It's a really crucial long-term thing. This swap agreement provides a big liquidity backstop, ensures financial stability for New Zealand if things get tough, and it deepens the financial ties. So that supports New Zealand's economic outlook, helps its currency, and then, that has a ripple effect on other antipodeans like the Aussie dollar, which often move together. It's a quiet but pretty strategic move.
Okay, moving from currencies then, let's dive into commodities. This is often where we see the most direct, almost visceral impact of global tensions. Crude oil, for instance. It's acting pretty choppy right now, wouldn't you say? Almost like a barometer.
That's a great way to put it. Choppy indeed. WTI is holding between, $63.48 and $64 a barrel, roughly. Brent, just under $67.50. And we saw earlier gains based on geopolitical news, specifically those reports of Russian missile strikes damaging the EU mission HQ in Kyiv, but they were quickly unwound. So while the market reacted initially, the pullback suggests traders are kind of pricing in this uneasy balance despite the underlying risks still being high. It's a constant adjustment.
And there's another potentially big geopolitical shoe that might drop for the oil market this week, isn't there? Related to Iran this time, something that could really hit supply.
Yeah, there are reports, pretty strong ones, suggesting the EU might move to trigger a snapback mechanism against Iran this week. Now, this isn't minor. It basically means reimposing UN sanctions that were lifted under the 2015 nuclear deal.
Yeah.
If that happens, it's a significant escalation. It would almost certainly add to tensions and, crucially, supply concerns in the oil market. Could definitely push prices higher. It's a big lever to pull.
Right. Meanwhile, spot gold is, doing what gold does in uncertain times. It's pushing up, testing a pretty significant level, both psychologically and technically. It's almost like everyone runs for the financial bunkers when things get shaky.
Yeah.
The classic safe haven move.
Exactly that. Spot gold pushed up to test the $3,400 level, right amid this tense geopolitical situation. Traders are watching very closely to see if it can break that resistance between $3,402 and $3,409. It's just a clear sign of its role as that premier safe haven asset. When the world feels unpredictable, investors flock to gold.
Okay. And copper, other base metals. The briefing says mixed but generally firmer trade, but not a lot of conviction because the dollar's so quiet.
That seems right. Limited conviction there. But amidst all this volatility and tension, there was actually a vital piece of energy infrastructure news, something that signals a return to stability, at least locally, for some countries.
How's that?
Well, it's Hungary confirming that crude supplies have resumed through the Druzhba pipeline after a restart. Now, this specific detail is actually really important because it ensures flows specifically into Hungary and Slovakia. For these landlocked European nations, it means a critical supply line is back up. It eases immediate energy security worries and shows that, even while the bigger picture is tense, specific efforts are happening to fix vital infrastructure. A small positive with a big regional impact.
That definitely brings us right to the geopolitical front itself, where things remain incredibly intense and obviously have direct implications for markets, but more importantly, for human lives and global stability. The scale is just... Yeah.
It's profoundly concerning the way these conflicts continue to escalate and shift. In Ukraine, the briefing mentions overnight Russian drone and missile attacks hitting multiple regions, which forces you to ask, what was the immediate human cost, the diplomatic cost? And how does this fit Russia's strategy right now?
The briefing gives some tragic details. At least 8 people killed in Kyiv, according to President Zelensky. And beyond that terrible human toll, the strikes also significantly damaged EU diplomatic buildings in the capital. That prompted immediate calls from EU officials for stronger sanctions, more pressure. It just shows how these attacks directly undermine diplomacy and escalate things further.
And then, in a kind of stark tit-for-tat, you had Ukrainian drone strikes in Russia's Krasnodar region hitting the Afipsky oil refinery, causing a fire. Authorities said the fire is out now, but the incident itself just highlights the ongoing back-and-forth nature of this conflict. It shows deliberate targeting of critical infrastructure on both sides, trying to inflict economic damage, and it points to a widening conflict zone.
And the tensions aren't just in Eastern Europe. The Middle East is still a critical flashpoint too, isn't it? With active military moves and reports of incursions. That paints a very complex picture there.
Absolutely. Israel confirmed its forces are operating across all combat zones. And this followed reports from Syrian state media about a ground incursion near Damascus.
Hmm.
These reports really underline just how broad the scope of the conflict is in that region. It's not just isolated skirmishes, it suggests widespread military engagement. It points to a deeper, more entrenched instability that crosses borders and connects regional actors.
So when we try to put these two major geopolitical zones together, Eastern Europe and the Middle East, how should we understand their combined impact? I mean, these clearly aren't separate issues, are they? They feel deeply connected.
That's the critical point, I think, that these developments, whether it's Kyiv or Damascus, they collectively just underscore the ongoing profound volatility across both regions, and they aren't isolated. They're pieces of this larger, interconnected global puzzle. And the potential spillovers into global energy markets, currency markets, they're significant. We're talking impacts on oil prices, currency stability, and ultimately the wider global economy. The ripple effects are just considerable.
Okay, finally, let's turn to the global stage of trade. Relationships there are constantly being, well, renegotiated, redefined. Trade tensions seem to be in focus from quite a few angles right now.
They really are. And it's interesting, despite the strained relations, dialogue is still open between China and the U.S. mess. China's top negotiator, Li Chenggang, is actually traveling to Washington for talks, which makes you wonder, how much can these high-level talks really achieve with all the broader economic and political friction? Or is it more about just keeping lines of communication open to prevent things getting worse? It feels like a delicate dance.
Yeah, a very delicate dance. But while some are talking, others are thinking about retaliation, right? Especially in Europe, looking at the U.S. digital sector. President Macron's stance is notable here.
Indeed it is. Macron urging his ministers to consider retaliatory measures against the U.S. digital sector. That's significant. It hints at a possible escalation in EU-U.S. trade disputes, but it's very targeted, isn't it? Aimed at a key high-value sector, not just broad tariffs. It feels like a strategic attempt to maybe gain leverage where the U.S. is dominant, possibly force concessions rather than just have a general tariff fight. It's like a focused shot across the bow.
And Mexico's getting involved, too, preparing to raise tariffs on Chinese imports, things like cars, textiles, plastics, as part of their upcoming budget plan. That sounds like more than just a tweak. It could really impact North American supply chains, couldn't it? What's the thinking there?
It seems very strategic from Mexico, likely influenced by, its close ties with the U.S. and this whole nearshoring trend, companies moving production closer to North American markets. By raising tariffs on Chinese goods in these key areas, Mexico essentially creates incentives for more investment in Mexican manufacturing. It integrates its economy further with North America, potentially building a more resilient regional supply chain, less dependent on China. It's a clear economic play with potentially big long-term effects on global manufacturing.
And then looking towards Asia-Pacific, India extending its cotton import duty exemption, Japan's trade negotiator postponing a trip to Washington. These seem like smaller pieces, but do they tell us something bigger about the region?
I think they do, yeah. Taken together, these actions sort of underscore what the briefing calls the fragile state of Asia-Pacific trade talks. What it suggests is there's just not much momentum for those big multilateral agreements right now. Nations seem to be prioritizing their own specific economic needs, like India needing cheaper cotton for its textile industry. They're focusing on that over pushing for wider trade deals. It points towards a more fragmented global trade picture, maybe more bilateral deals or sector-specific things rather than big regional pacts.
So when we step back and look at all these trade shifts, the U.S.-China talks, the EU-U.S. friction, Mexico's tariffs, the stalled talks in Asia, what does it really mean for us, as consumers and for businesses globally? It feels like this isn't just abstract policy.
Oh, it absolutely isn't. These different moves, they really highlight a rapidly shifting global trade policy landscape, and currency markets are already starting to reflect that uncertainty. For businesses, it means real impacts on supply chains, where things get made, where investments go, and ultimately that creates pressure on consumer prices around the world for, well, a whole range of products. We're likely to see the effects on everything from the cost of your next car to, the clothes you buy. These trade moves have tangible consequences.
Wow. Okay, that was an incredibly dense but really fascinating deep dive into what's happening right now. We've covered so much ground, from those subtle shifts in currencies to the very real impacts of geopolitical conflicts and this complex chess game of global trade.
Yeah, and what really stands out again and again is just how interconnected all of it is. A French finance minister confirming a budget target might subtly help the euro. A drone strike on a refinery directly impacts oil prices. A trade negotiator postponing a trip signals broader uncertainty. Every single event seems to cascade across currencies, commodities, trade. Knowledge in this kind of environment really is power. It lets you understand and maybe anticipate these shifts, not just react after the fact.
Absolutely. So you just received a pretty comprehensive briefing, really extracting the key insights from a whole stack of complex sources. You should now be equipped with more context to see that bigger picture, to connect the dots in a way that, frankly, just skimming headlines doesn't allow. It gives you a real edge in understanding the world.
Well, maybe here's a final thought for you to consider. As all these global dynamics keep shifting, what areas do you think might experience the most unexpected ripple effects? And how might understanding these intricate connections actually impact your own perspective, maybe decisions you make, whether they're personal or professional?
Definitely something thought-provoking to mull over as you go about your day. Thank you so much for joining us on this deep dive into the global landscape.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.